The, the definition I will read out, then you will understand why I am telling it. Cost of inventory shall comprise of all costs of purchase, cost of services, cost of conversion, and other costs incurred in bringing the inventories to their present location and condition. If you remember, in AS2, there are some 2 or 3 more words there. That is, the tax and duties which are recoverable subsequently will be reduced, which we call as exclusive method of valuation. But this had been already there. It is nothing new. Section 145A. If you remember, in the tax audit report also we are asked this question, that whether the valuation of inventory has been in accordance with section 145A. Why they ask it? The importance is that this 145 and 145A, just reading it out, then you will understand why I am reading it out. Notwithstanding anything to the contrary contained in section 145, that is the method of accounting, the valuation of purchase and sale of goods and inventory for the purposes of determining the income chargeable under the head profits and gains of business and profession shall be in accordance with the method of accounting regularly employed by the assessee. Okay. But the second one, further adjusted to include the amount, mind it, to include the amount of any tax, duty, cess or fee by whatever name called actually paid or incurred by the assessee to bring the goods to the place of its location and condition as on the date of valuation. You know that several disputes have been there and still they are continuing, whether exclusive method will be followed or inclusive method will be followed. As per section 145A, an assessee is compulsorily required to follow inclusive one. And here, when they have defined what is cost of inventory, they have excluded those 2 words, those 2 or 3 words which are appearing in AS2, that not taking into account the tax or duties which are subsequently recoverable. That means the input credit and all these things that cannot be taken. The second one thing, as I was telling, comprise of all costs of purchase, costs of services. Do we always take the cost of services? So it came to my bound what they want to mean. Then there is a separate definition of cost of services. Friend, this is important for all chartered accountants for their own practice, wherever they maintain their accounts under mercantile system of accounting. I am aware, I have been told, and I think what has been told to me is correct, that because of the requirement of service tax, of the turnover is more than 50 lakh and all these things, they are on the basis of invoices raised or works performed, one has to pay the liability of service tax. The firms, maybe certain individuals having a good turnover, are compelled to change to mercantile system of accounting. So they will be caught by this. Why I am telling? Then they have given a definition of cost of services. The cost of services in the case of a service provider. This is the new thing. Mind it, cost of services in the case of service provider. Have we ever thought that there will be some inventory of a cost, this service provider? Like us, what do we have? What do we have? Materials, some pages, some CDs, some pencils. Other than what? But now we have the cost of services in the case of a service provider shall consist of labor and other cost of personnel directly engaged in providing the service, including supervisory personnel and attributable overheads. If we only read this thing, it will only confuse us. But if we go back to the definition of inventory, then it will be more clear to us. They define inventories as like this. Inventories are assets. Then they have given 1, 2, 3. 1, held for sale in the ordinary course of business and the goods. 2, in the process of production for sale, for manufacturing organization WIP. 3. In the form of materials or supplies to be consumed in the production process. That is also. Then there is something which has been added by using or in the rendering of services. When we come to this revenue recognition, then we will understand that why I am talking so much on this. Now, the other thing that there is in inventory valuation, more or less like AS2, they have also told, this ICDS also tells that you will follow FIFO or weighted average method. That is also in our AS2 also. But as regards the method, if you remember, then in AS2, along with retail cost, retail method, there was another method which has been mentioned there, that is standard cost. In income tax, there will be no place for standard cost. That means if there are many materials of the same nature, I just can't make a standard valuation and then put it for all the goods. For income tax, it has to be changed. So there will be great changes between the stock value that will be shown in the accounts along with and the for the income tax purposes. One good thing is there also. You know, when you go for assessments, let's consider this thing. For assessment year 2013-14, that means financial year 12-13, my closing stock was say 10 lakh of rupees. In the assessment, the assessing officer had increased it to say 15 lakh of rupees. But when the assessment is being made, my 14-15 return has gone. My 15-16 return also may have gone. And for 14-15, maybe I don't have any time to revise the return. So what will happen? Because 10 lakh have become 15 lakh. So naturally next year's opening stock should also be 15 lakh. How can I go? If I go to the assessing officer, he will tell, you have not claimed it in the return. I have voiced into a Supreme Court decision. Until and unless you have made a claim in your return or revised return, I just can't touch it. That is the answer to be given by 100% officials of the income tax department. It was not possible to make them understood that a closing stock value will have to be mandatorily next year's opening stock value. It was very difficult. Now they have come up here. They are clearly written, and you know, when they write it in this thing, then they will agree. And if you ask them why you are not agreeing earlier, well, because they have not told. The value of opening inventory, how they are written, the value of inventory as on the beginning of the previous year shall be, the first one they have written that if the business is commenced during the year, then the first date. Then the value of the inventory as on the close of the immediately preceding previous year in any other case. So that's a welcome thing, welcome clarification I should say. Sometimes you know, we had a bowler, Bhagavat Chandrasekhar. Once he was making appeals to the umpires, he was not giving out. He was so disgusted. When you bowled a batsman, then also you looked at the umpire, how's that? Sometimes you have to show how you are angry. Here also, by making that thing what is known to everybody, that they have written. Now, here also once the valuation system has been adopted in such a way that is, say, FIFO or weighted average method, if you want to change that thing, that change has to be backed by a reasonable cost. So if there be reasonable cost, then that change will be accepted. For income tax purposes, mind it, these are all for income tax purposes. That has got no relevance for the account. But the last item that has come in this ICDS 2, it is in regard to valuation of inventory in case of certain dissolutions. Friends, maybe some of us who are in partnership firms, or maybe some of our clients who are partnership firms, they will be affected by this. What? Why? I am reading it out. In case of dissolution of a partnership firm or association of persons or body of individuals, notwithstanding whether the business is discontinued or not, the inventory on the date of dissolution shall be valued at the net realizable value. Till now, what one was doing, the book value, whatever is there in the balance sheet, that used to be considered as the value of that. For income tax purposes, it cannot be done. If you remember, under the capital gains chapter, there is a specific section 45(4), if I remember correctly, which says that if a partner is paid or a partner leaves the firm, whether by dissolution or retirement, and some capital assets are taken by him, then those capital assets have to be considered at their market value. But that was only for capital assets. Inventory was not there. So now they have brought inventory by this way. So both capital assets and inventory, the stock items, will have to be valued at the market value prevailing on the date of dissolution, and that will have to be taken into consideration. I am aware that there are certain court decisions which had held that it cannot be, it has to be only book value. But again, as I am telling, that if somebody wants to fight, he can fight. But if somebody does not have a very great amount involved in it, it will be better for him or her for audit to accept and follow these ICDs. As regards inventory valuation, I will have to come back here after we consider the construction contract and recognition of revenue. Because there, the valuation of inventory, though not specifically mentioned that it will have an effect there, but as I understand, and you will appreciate why I am telling, as I understand. Because then it will come there. Huh? What? Which para you are talking? Yes, where this valuation of inventory will not be applicable. Yes, any question you have got, it is same thing like our S2. There is no deviation, that's why I did not mention it. Yes, because there is a separate one, as I told you, ICDS 8, that is only for securities. And you know, whenever, that is the general law all over India, not only all over India, all over the world. But if something special provision is made for particular issue, then the general process or general system or procedure cannot be applicable. Here they have told it will not apply, and they have categorically told also, if you have noticed, shares, debentures and other financial instruments held as stock in trade which are dealt with by the ICDS on security, that will not be taken. But since that will be this security, that's a very important thing, but I don't want to enter in the work that has been allotted to someone, because that will be done by some people. Mr. S.S. Gupta will be dealing that thing, and he is a great expert, so you will hear from him tomorrow. I am not touching that. I might have in that way.
Suppose in a hotel industry, they maintain lots of stock of crockery, cutlery, kitchen equipment. In that case, while valuing the inventory of crockery, cutlery, there is no NRV of that crockery, cutlery for that industry. It is only the cost. So sir, in such circumstances, what will be the valuation? मतलब how they value the crockery, cutlery and kitchen equipment?
How are you doing in your account?
So it has been kept as an inventory and showing as a
How
cost
are you showing this thing in your accounts, I am asking?
at cost, sir.
If you are showing that at cost,
Yeah.
though you are knowing that in all likelihood the NRV will be lesser than that
Yes.
thing.
Yes. Sir.
As per this law, it is lower of this thing. Then you have to tell that according to me that NRV is also same or not less than this. It's up to you.
But
What
sir,
I want to say, unless, see, somebody has to find out the NRV, then only one can compare it, isn't it?
sir, but there is no NRV for that crockery, cutlery. It means NRV is need. NRV is need.
How can you say?
Sir, because that crockery, cutlery is being used in the operation but is not consumed in the operation.
Okay.
And then again it is going to that inventory. It is in a store form and it is being not consumed there.
Crockery, cutlery which has been used, are they still shown as inventory or they are consumed
No,
as
it
a
is
charge?
shown in as an inventory. It is shown as an inventory.
See, here at the specific question that you have asked, according to me, if I find NRV is 0,
Yes, sir.
if I put that 0, then you will be asked by the assessing officer to show why you have put it 0. How you have got that the NRV is 0. Then you have to explain it. It will be up to you that these don't have any market, that's why it is net realizable value is nothing. Because here that particular definition does not come into play, that you find out the NRV, then reduce that by the expenses to be incurred. This is the straightaway cost of items.
Yes, sir.
So according to me, if you show it at 0, you can.
But sir, is it not better to show it at cost only as per my books of accounts so that I can explain कि whatever inventory I have purchased it, there is a say, standard 10 to 15% breakage of that inventory of crockery, cutlery in a year.
I would only say this thing, that in your accounts you are showing this as cost.
Yes, sir. Yes, sir.
Okay. The moment you are going to show this as NRV as 0, that means you are following this. Without having a backed up papers or document, if you do that thing, it will be at your own risk. But if you show it at the cost, no income tax officer will object to you. Because that is closing stock will be shown at a more value for this year. You have to think that where they will come up. If you reduce it, then they will come
No,
up.
no, sir. I want to show it at a cost.
Then show it.
We want to show it at a cost.
Then you show it. See, but when you will have to write that in income tax, which one you have taken, you have to show that that is the minimum value, that is the lower of the value. But you are offering something more, so nobody can do any, nobody can challenge. I should say nobody can give you any punishment for that. There is no other way. Practical possibility is also a thing. Whether it is practicable to have the plates that have been used to put a value. Not possible. Huh? Auditor for what purpose? See, he is accepting the value shown in the account. I am talking what I am talking. See, both the things cannot be done. Let's consider this thing. As per accounts, as per ICI standard S2, you have to take the cost or this, whichever is lower. When you are taking their cost, that means you are accepting that that is the lower one. What you are doing, that is follow here. If the auditor is accepting this account, then he will have to accept it. What I want to say, you cannot do something other than what you are doing for the accounts here at least. Because as per AS2, is it not cost or market value which is lower or cost? So are you showing that we are showing at cost? If you are showing at cost, let it be shown at cost, the auditor is accepting it. But for income tax purposes, if you want to show the lower of this thing, then you have a duty to find out what is the market value or NRV. If If you are not able to do it, then show it at the cost. If you want to claim a relief, it is your duty to find out the basis, to backup paper, to document your aid. Auditor will just write that in the accounts you will write that. But when he is going to write about the tax provision, there I think that he will be required to write that whether the tax provision has been made after complying with all the ICDs. At least in the tax audit report, which I expect that it will be more than three times size what we have got now. Now, should I or because well, now we are going to this construction contracts. AS7 we have got for ICI, and here one thing must be kept in mind, as we understand that AS7 is applicable for a contractor, not for a developer. The same concept will have to be kept in mind here also. If a developer is there who is not getting the construction done by himself or herself or itself, then it is AS9 there, here ICDS 4. But if somebody is carrying out the construction contract, it is only for that type of assessee where this ICDS 3 will apply. This is the basic thing first. Second, categorically it has been stated here also, similar to the ICDS 1, that no anticipated loss can be taken into account. What they have written there, here also, no anticipated loss can be taken into account. There are several points of deviation from AS7. I am touching one by one. At the starting of a contract, let's consider whether it is revenue recognition or for construction contract. When I allot a work to a contractor, or when I am the contractor, I am having negotiation with certain prospective client of mine. What they ask what will be your contract price, isn't it? Can I save the contract price without making my calculation about the expected cost? Can anyone do it? This is very important to keep in mind, because what we are going to discuss, what are written there, whether it is for construction contract or the revenue recognition, that means, is there any different opinion in this regard in this hall, that any person who is offering a contract price, whether for construction contract or for any work to do, can he offer that contract price without first estimating what will be his cost for completing this thing? So we are all unanimous about this thing. This is necessary, because when we come to the later on the position, those will be. Here also, as I have told, that there is no scope of prudence, there is no scope of considering the future losses, as we are not to consider future income. Now the point comes, when the contract starts, construction contract starts, because we are now with construction contract, it may go to another year. In all likelihood, it will go. So at the close of the first year, certain valuation is required to be made, isn't it? That is called WI, work in progress. As per the mercantile system of accounting that we follow, what is expected of us? What is expected of the construction contractor? The entire expenses that have been incurred for that particular project, which has been debited to the profit and loss account, should also be credited to the profit and loss account at WIP, so that those expenses are not claimed. Isn't it? Whether one is doing that or not, that's a different thing. Ideally, one is to be done. What has to be done, let's consider it in only that way. Now, in our accounting standard 7 as well as in ICDS, they have written like this. This I am reading out. During the early stages of a contract, where the outcome of a contract cannot be estimated reliably, revenue is recognized only to the extent of costs incurred. That I just told you. That whatever costs are there, that are. But what they have told, it is same thing like AS7. During the early stages of contract, where the outcome of a contract is cannot be estimated clearly. Up to what period I will say it early stage. AS7 does not say it. Here they say. The sentences that I just read out is followed by this sentence. The early stage of a contract shall not extend beyond 25% of the stage of completion. So let's consider by a practical example. I have an allotted work by Mr. Nitesh Moore for 1 lakh of rupees. I have started the work. I offered him that 1 lakh of rupees after I made a calculation, say that my total cost will be, say, 60,000 rupees. Okay, let's for the easier calculation, 80 rupees. Not so much profit, I will say. 80,000 rupees. That means what? 80,000 rupees, 25% profit, it comes to 1 lakh. This is in my knowledge. Now I have started the work, 31st March has come. What I have to see? How shall I understand whether 25% of work has been completed or not? There is only one way. What is that? How much of the cost have already been incurred? I have, in my idea, it will be 80,000 rupees. I will have to see whether I have incurred expenses more than 20,000 rupees. The moment I exceed 20,000 rupees, performance-wise, 25% work is done. Is there any difficulty in understanding this thing? They have not written it, but they have not clarified it. I am sure that every chartered accountant will have also thought in this way only, because there is no other way. So, what offer they want me to make? What recognition they want to make? A proportionate revenue. My expected revenue was 25%. I have completed, say, 30,000 work. So 30,000 to be added. That means 25% of that is 7,500. This I have to offer as income of that period. That is the requirement. What way it will be done? It is very easy to do the mathematical calculation. How this will be offered? In what mode it will be done? That is the question. My idea is this thing. There can be two ways. First, value the WIP at 37,500 for the purpose of computation. Have the calculation all in a working sheet. And the other way, in my computation sheet, I shall show add proportionate revenue 7,500. These two are possible. Which one should follow? It has to be decided. But I can give my view. My view will always be value the WIP. Why? Because that will save one harassment. If I show it as closing stock, it will be automatically next year's opening stock. That they have already told. But if I show it as 7,500, I may lose track. I may, it it is not always that a same person will be doing the returns, everything for consecutively for a number of years. But the record will be there, wherefrom I can find that that was considered as my closing stock, so naturally it will be next year's opening stock. So my suggestion is this, that the valuation of the inventory in the form of WIP, where I am required to offer some revenue proportionate, there I will do that by way of increasing the value of WIP to be shown in the return, to be shown in the computation. How it will be shown in the return form, that I am coming later on.